We're turning our focus to banks, and PSU banks seem to have outperformed private banks. What's driving this factor? What are the key trends? Sumit joining in for more.
Well, it's a clear divergence that we are seeing between the PSU and private banks. If you look at it in the last 3 months, the Nifty Bank Index was largely flat. The Nifty PSU Bank Index was up 6%, while the Nifty Private Bank Index was down 2%. And if you look at the last 6 months' performance, the Nifty Bank Index was up 15%, Nifty PSU Bank Index was up 26%, while the Nifty Private Bank Index was up just 13%, even underperforming the bank index, that is the Nifty Bank Index. Now, what's driving this outperformance when it comes to the PSU Bank? Firstly, on the NIM front, the contraction for PSU banks was relatively contained at around 6 to 18 basis points, while the margin contraction for private banks was relatively sharper. When it comes to asset quality stress, there was no unusual stress that was reflected in any of the PSU banks in the first quarter of FY 26. But when it comes to private banks, they were impacted by seasonality. In fact, the credit cards and microfinance credit cost was also quite elevated for private banks as against PSU banks, where the credit cost was largely moderate in the first quarter. Now, when it comes to credit growth, except for Union Bank and PNB, all other banks had outpaced the industry growth rate, while for private banks, if you look at, the credit growth was even below the non-food credit growth in the first quarter. Now, when it comes to profitability, if you look at PSU banks, the treasury gains, operating leverage and contained credit costs supported the company's profitability and return on asset, while when it comes to private banks, margin contraction was seen, credit cost was also higher, because of which PAT growth was hit in the first quarter. Now, how's the outlook when it comes to both PSU and private banks? Firstly, when it comes to private banks, the top picks as per analyst consensus is Axis Bank, which an analyst expecting a return potential of around 19% here, followed by ICICI Bank, similar return potential. HDFC Bank, Kotak Mahindra Bank and Federal Bank are expected to give a return of anywhere between 13 to 15%. But when it comes to PSU banks, not many analysts cover this stock, but among the top ones, Bank of Maharashtra is expected to give a return potential of nearly 25% over the next 1 year. Union Bank, Bank of Baroda and SBI anywhere between 10 to 14% over the next 1 year.